Mm, okay, yeah. Hello, guys. So, this I hope should be a short video. And in the last video, the mistake I explained to you guys that not picking up the right pair, I stopped doing it. I started picking up the right pair, and in this trade, it worked out like really, really well. I'll show you how. So, first, I think it should start from the weekly. Yeah. Okay, so this was the previous week's candle, big red candle, and the price was now here between this small volume imbalance and this weekly order block. If we go on the daily, there was this daily order block as well, and yeah, so this was the day I got the trade, and this is the previous trade, and on the previous day it stayed inside this area, and given we had this huge imbalance, I expected it to get filled, and this order block was also in the OTE zone. Okay, so if we go on the daily, you can see this candle, I mean Tuesday's candle, took previous candle's high, right? And previous candle's liquidity is significant. So okay, 4 hours, is there anything? Okay, yeah. So I marked the Sunday open of this week, and initially I had a bullish bias because I thought that we would get a protraction into the imbalance and then a move up. But then on Monday it was just a move up, so I changed my bias to bearish because the protraction is on the opposite side of the real move. And I thought, yeah, the imbalance is like actually quite big, that it might actually need a real move of a candle rather than just being a protraction of the real move. So yeah, 1 hour, and the 1 hour we can see this was the opening price for Tuesday, and as you guys can see, we got a perfect market structure shift on the 1 hour, and this looked like a clear market maker sell model. We got a market structure shift from a very key level in terms of both, sorry, OTE and PDAs. So then I marked out this high to this low. I thought of getting a New York, sorry, a London to New York OTE, but I was open if I wouldn't get it. And I basically just wanted my stage, which was which is my confirmation for taking an entry, and it was a lower time frame market structure shift with a good displacement, and I got that. We had this 1 hour fair value gap. If we go on the 5 minute, this is the 5 minute. Price went up, higher high. It took this, and then it came down, and this was like a really, really good displacement. And but as you guys can see, I did not get my target on the DXY, but I did get it on GBP and I recently learned about this. I mean, by recently, I mean yesterday, that a way to gauge a strong or a weak pair is not just like, for example, if you're gonna see which is the stronger pair from Euro GBP, from like either Euro USD or GBP USD, you have to look at the Euro GBP chart. If DXY is bearish, you look at a bullish pair out of those two. But there's a simpler way to do it, at least for me, and I'll show you guys. I said a lot of unclear words, I think. Okay, so Euro USD, GBP USD. Yeah, so it is called the SMT divergence, and yeah, so as you guys can see, this was the market structure shift which triggered my entry. Right here, you see this low. Here it is that high, the exact same time, and then you see a lower low made, and then we get this low, and then the displacement on which we get our entry. But if you look at it here, we get a low on GBP but then we get a higher low. Here we have a lower low, here we have higher low. What does a higher low represent? It represents strong bullishness. We are expecting bearishness in the DXY, and to pair good and to pair up with a good currency, we need a stronger currency, a bullish currency, because these are inversely correlated. So what I basically did was I chose GBP USD, and if you really like even this higher low, it's here, basically very strong. And then we had this fair value gap, these two candles. So these were like two fair value gaps, and I just put my entry here. It was also like the 50% of the from the gap between here to here, and it was good. I had this as a stop loss. It was a pretty safe stop loss. I had an order block, and as well as two gaps. And in terms of my target, I think it was a 1 hour fair value gap top. Yeah, it was this 1 hour fair value gap, and instead of putting it on the edge, I prefer to put a target a little below what I would put my target, just because like it should, a lot of times it happens that price goes very near your target, very close to your target, and it reverses. So just to avoid that, yeah, the target was here. And yeah, as you guys can see, given GBP was really bullish and these are inversely correlated, this short move here gave me this move, like it hit my target. And yeah, this trade was a really good trade. Yeah, thank you guys for watching, even though I don't think anyone is watching, but it is fun.